Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis, episode 10 for week ending December 12, 2020. On Monday, Tesla continues higher, closing at 641.76, up 7.1%. As I mentioned in last week's video, the top of the green channel, which lines up with the highs of July 13, shows that there is resistance at around the 640 level, which is right around where Tesla closed today. Now, if I adjust the green channel to the highs on September 16, there is a potential support at around 617, which is where the top of the green channel lies. The MACD still looks very bullish as it's still above the signal line and in an upward slope. The RSI is also very bullish, although it's in overbought territory. As I mentioned in my previous videos, it can linger in this overbought territory for quite some time, as it did back in July and August. On Tuesday, Tesla continues higher, up 1.3%, closing at 649.88. The top of the green channel is now acting as support as Tesla bounced off this level at its intraday lows. So I do see support at this level at around 620. If that level breaks, the next support level would be around 600, which is the top of the red channel. This was also the point of resistance all of last week. On Wednesday, Tesla pulled back 7%, closing at 604.48. It broke down into the red channel at its intraday lows. However, it did find support at the top of the red channel at around 600, where it closed at 604. And if I adjust the green channel to the highs of July 13, you can see that Tesla tested the top of the green channel at its intraday highs at around 653. On Thursday, Tesla was up 3.7%, closing at 627.07. At its intraday lows, it tested support at the top of the orange channel at around 570. It closed right around resistance at the top of the green channel at around 625. Also note that the MACD is starting to turn as the gap between the MACD and the signal line is getting smaller and smaller. Meanwhile, the RSI is starting to fall from overbought territory. These are all indications of a potential pullback. On Friday, Tesla was down 2.7%, closing at 609.99. At its intraday highs, it came close to testing resistance at the top of the green channel at around 628. It broke down into the red channel at its intraday lows. However, it did close at support at the top of the red channel at around 610. If you look at the MACD, it's coming close to a bearish cross. Also, if you look at the RSI, it's falling down from overbought territory. These are all bearish signs and would lead me to believe that Tesla will continue to pull back next week. If that support level at 610 breaks, it could fall down to the bottom of the red channel at around 585. And if it continues to break lower, it can head to the top of the orange channel at around 575. However, if bullish momentum continues, Tesla could retest resistance at around 628, which is the top of the green channel. And if I adjust the green channel to the highs of July 13, the next resistance level would be around 660. So those are my price targets for next week. Bull case, if it could hold above 610, it'll head to 628. And if it breaks that resistance, it'll head to 660. Bear case, if that 610 support level breaks, it can head down to 585. And if that support level breaks, it can make its way down to 575. Now, on to Tesla news. Tesla could soar another 300% as the company expands its tech outside the auto industry. Analyst Gene Munster says Tesla could soar over 300% to $2,500 in the next 3 years. Munster said Tesla would evolve over the next few years to become more than just a car company. He cites that they're really going to take their tech that they're defining and pioneering with auto and applying it to new markets. He goes on to talk about the significance of Tesla Insurance, which is potentially another source of high margin revenue. Lastly, Munster says Tesla will continue to evolve and be a tech leader in the next decade, pointing to flying taxis as another frontier Tesla could expand to that could propel its stock price. Munster also said that the only competition that he would be concerned about is Apple if they happen to emerge with an electric vehicle to compete with Tesla. Tesla gets $90 price target from JPMorgan's analyst Ryan Brinkman. Brinkman says Tesla shares are, in our view and by virtually every conventional metric, not only overvalued but dramatically so, citing a stock price that trades at 1,325 times its long-term PE multiple and 291 times its 2020 estimate. Brinkman advised clients not to increase their holdings in Tesla to its approximate 1.44% weight in the S&P 500 benchmark, even as the bank itself suggests that index tracking funds will sell $57 billion worth of shares in other companies in order to gather up Tesla shares before its December 21st entry. I did some research on JP Morgan's analyst Ryan Brinkman, and look what I found. A measly less than half-star rating for this Wall Street analyst. All my feelings and opinions toward this news release can be summed up in one emoji. Tesla to raise up to $5 billion in share offering, its second in 3 months. The additional shares will be sold from time to time and at the market prices. The new offering represents less than 1% of the company's value. The plan comes at an important time for Tesla, which is in the process of building new factories in Germany and Texas as part of its global expansion. Building new plants is extremely capital intensive for automakers. Tesla warned investors of its upcoming spending in October, saying it planned to spend $2.5 billion in 2021 and 2022. Especially on new factories and expansion, including battery cell manufacturing. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.